Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Gold market still stands in tight range, so again it's the third session in a row we do not have any updates on the gold. By this reason we could take a look at something else. So yesterday and 2 sessions ago we talked about the New Zealand dollar, so although perspective maybe of the Kiwi dollar is not very superb in the longer term perspective, but in the short term the chances on the pullback on the New Zealand dollar are not zero. So overall technical setup keep the space for a possible some action, upside action on the daily chart. So and today we will take a look at Great British Pound. On the Great British Pound, you could see on this chart our major setup that we have prepared before the voting, or the first voting on the Brexit agreement that should happen, but it has been postponed, as you know. And right at the eve of this voting, we said that whatever will happen, whether this agreement will be accepted or not, we expect some kind of the drop to the downside and hitting of the major COP target. So maybe this will be just spike down, maybe this will be something else, but before any reversal, due to the volatility, at least due to the volatility, market should hit the COP. Because this COP, guys, is very significant. So I'll take a look at the weekly chart. As you can see, that is actually the collapse starting point here. The A, B, C top, and the CD leg is rather strong as well. So it's very significant sell-off has happened here. And market has hit the COP. So also we have the COP is accompanied by the bullish divergence. And what is more important is that here on this upper direction we see kind of the acceleration. This is currently is understandable, guys, because actually with the whole few months previously investors were under pressure of the common Brexit agreement, and many investors treat this agreement as a negative for the Great British Pound, for the United Kingdom. So this is breaking long historical relations between the European Union and the United Kingdom, and when everything breaks that was working for a long period of time, this hardly it could be treated as a positive sign. Also, probably from our reports, guys, you probably know about all the turmoil about the North Ireland border. That's really splits the United Kingdom whole economical space into two parts, and that is one of the really big problems of the Brexit agreement. And when the market has got relief that this agreement has not been passed, that brings some hope that maybe they will change the mind, maybe they will find some more acceptable decisions on this subject or something of that sort. So this is a kind of the same as the options value. So if you have dealt with the options sometime, you probably know that the longer till the expiration of the option, the more expensive the option cost. So the same story with the Great British Pound. There's more time till the agreement voting again, and they bring some space for currency to fluctuate in, and that let market to come out from the pressure that keep this in tight range due to the coming destiny of the agreement acceptance. So this is widening the range for trading, since this is more time to the acceptance of the Brexit agreement. This is more space for bringing some new maybe inputs in this agreement or something of that sort, and that gives relief to the Great British Pound. So here we have some kind of the relief here on the currency, and even some kind of the acceleration we see here on the intraday chart. That makes me think that market really could continue move higher a bit. At the same time, we should keep in mind this stuff. So actually we have it's kind of a harmonic swing in place. So we'll take a look at this one. You could see that actually it has been completed here as well, almost has been completed. Market could just continue move higher, and this harmonic swing actually repeats again and again. So because this is retracement, here we should take a look at the downside retracement. And you can see it was really typical for Great British Pound here. So it's a bit small retracement. Here was the same. So this repeats very often on the market. It's one of the areas that we also should keep in mind. But potentially, I would suggest that market really could show retracement right to the 33.16 area. This is 30% level. The market really could reach. The reason why I think so, because guys, actually, if market would like to continue a downward action based on this butterfly, usually it could just limit its retracement by the minor respect on 30%, or at least the 618. But if you will take a look at intraday charts, and we will do this very soon, you will see that all fib levels on this upward action has been broken. That makes me think that we could keep in mind and keep an eye on a more extended target based on the butterfly and based on the patterns that we have on daily and intraday charts. So, for example, on the daily chart, what we have, actually we have this very significant, huge morning star pattern right on the top, right on the bottom, and in fact here it's a kind of the double bottom pattern, guys, which suggests that we could keep in mind we could get retracement first to the 3160 area. That is the potential first destination point that we could keep an eye on. So currently, as you can see, market hits the trend line and daily overbought, and it means that within the today's session and within probably in the beginning of the week, we hardly will get the continuation immediately. We probably will see some pullback down before any upward continuation will happen. But at the same time, based on action that we see on the Great British Pound, chances that market could proceed action higher exist. On the 4-hour time frame chart, we have this ABCD pattern. Market currently hits the COP, the company with the daily overbought and the trend line. This creates great opportunity for a pullback. And the first level that market could reach is 128.70. That's the first level that we could keep an eye on as potential retracement target. Potentially, based on reasons that we have just announced, OP target stands at 31.85. This is a B equals CD target. Also, guys, if you treat it as a double bottom, the classical target of the double bottom points approximately at the same level. And finally, 31.85 target stands mostly in the same area where it stands first fib resistance, 31.60. OP stands 31.85, so they are relatively very close. That's the destination point where market could follow in the next week. Currently, we are watching the pullback to this area, and if we take a look at the hourly chart, you will see that actually this will be the confluence support, 28.70, 28.95 is confluence support in the hourly chart. Since we have the rather steep butterfly and daily overbought, well, chances are not bad that market will hit this area. So that being said, first we're watching for a pullback down, but the postponing of the final decision on the Brexit gives market some room to breathe, and that could let market to show a bit higher action on more extended upward retracement on the high time frames, on the daily, on the weekly. And after retracement will be completed, we will see what will happen, whether the market will keep chance on a possible continuation to the OP target on the 4-hour time frame chart to the 31.60, 31.80 area.